Morning everyone, Paul here with GammaEdge. Today is Monday the 9th of May. Let's get started. Please pause your viewer, read this, and when you're done, go ahead, hit the play button. Overall, the indices are showing fairly mixed in their presentation. We did have a slight drop on the cumulative negative GEX here for the SPX. We actually had a slight increase on the put side, or the negative gamma side, on the SPY, and we had a corresponding increase in the calls. That usually is showing that we're getting a form of rotation, and perhaps there's a good battle going on. The Qs drop on the net negative gamma, also a drop on the call side though, and that usually is not very good. Could be some monetization going on there. On the IWM side, the Russell 2000, a slight drop here in the put side. There is just no demand at all for calls, and this IWM's broken. Taking a look at the 0 DTE, we've got a fairly good setup for potential monetization and reversal, but just be aware we can stay red. And so we take a look here at the SPX. I've called out the major levels here. You can see in terms of the expiry, very little on the positive side, huge cumulative value here on the negative side. The dot is where we are, 4100 is the line. We're going to open probably below that today. That means there's going to be a lot of people who are in the money, and as we go down, we may see some monetization as we come back up through this. So just be aware of this. Keep an eye on that. The zeros are up here, well above where this 4190 is. It's going to be interesting to see if we do get a reversal, how far up we push. In the SPY, kind of the same situation. We've got this 400 here. We've got a major dominant negative expiry. Remember, this is equity settled, not cash settled, and so there will be some pressure to close these puts the deeper we are in the money, and that could cause a reversal on the dealer side. So be aware of that. The zero sitting at 40 or 412. Excuse me. Looking here at the Qs, we're already below this 310 level, pushing lower here at the 300. Kind of the same story here, monetization, equity settled, and then finally here on IWM, flat on the call side expiry. We're well below the put, and if we get below this 180 level, you can kind of see how some monetization could also occur there unless they want to be assigned. Taking a look at the histories here, we're pushing the lower levels of the POI, the put open interest dominant levels here. We're not seeing necessarily a major push upward. We're still very much below the zeros, and when we're this far below the zeros, we got a very, very big hole to dig out of. Take a look at the notes here. Make sure that you read through those. Taking a look at the flow summary. In general, Friday we saw a monetization of the puts early in the day, and they remained relatively flat throughout the day. Calls were relatively flat. This suggests a somewhat upward bias, but it could be misleading, right? So don't read too much into this, except to say that we did see some monetization on Friday. On the Qs, kind of a sustained closure of puts throughout the day. Some increase in the calls. Again, we would call that a slight bias to the upside. IWM, as I indicated, was just broken and is broken. We had some closing of the puts in the afternoon session. We had a general walk-up opening of puts in the morning. Excuse me, closing of calls in the afternoon session, opening of puts in the afternoon session. And that sustained, and then into the close, you can see they were really hedged into the weekend. So bearish on IWM until we get everything to align, small caps to perform. I think the market remains broken. Taking a look at the market model, this is the ARCX cumulative tick. We did end the day Friday at the lows. That's bad. I also want to note here, this is a 3-year look back history, and we're crossing the zero again. So basically, from a cumulative tick perspective, we've basically undone what we did and where we started 3 years ago. It's finally catching up to us, all these down ticks. Will note the cyan line, which is the longer moving average, is above the shorter term red moving averages. Everything here is parallel down. It's inverted, and this is bearish. And until we can get the cumulative tick to do a continuation, much like what we see here, didn't really get one here, didn't get one here. This is a continuation down. We need a continuation up, and we're not getting it right now. I think we play everything to the downside, short those bounces. Taking a look here at the SPX, got some details here. Please take the time to read these. We are seeing somewhat of a stabilization in some of the zeros with a movement up, but also note we are also seeing, to a certain degree, continuation down on some of the gamma zeros. So deltas moving up typically show that calls are being added or puts are being closed. That is bullish. Gamma dropping is the converse of that. We just have to look and see, is it above or below? Are they in the money, out of the money? And some comments here for you to review. Taking a look at the ES, this is the June expiry. I will note that the zeros are moving down. Typically when we see a single expiry like this and we see these dropping, it does indicate that puts are continuing to be added here in the ES. We are significantly below the minus trans level, and when that occurs, everything down here is net negative, and we still are quite elevated in the VIX, as you know. And since I did this, we've actually dropped quite a bit in the overnight session. At the open mic last night, there was a request to take a look at the skew. The skew index describes the tail risk, the 2 standard deviation, 3 standard deviations of put-call ratio, and where people are anticipating downside versus upside moves, etc. As the skew, which is the green line, goes up, there is more anticipation that we're going to drop, and then as the skew relaxes, there's a general form of rally that you can see here. I will say, this is the weekly, by the way, I will say this is not a very good timing model, but it does give some insight into market sentiment. I did put a link down here to Tasty Trade. They've got a fairly good video that goes through some things, and it's probably worth your while to watch it. I don't follow the skew, except I do keep it on a dashboard. In fact, Tom at Tasty Trade also said the same thing. He's got it on his watch list, but he doesn't pay a lot of attention to it. I will note that the last couple signals, even though we are in a downward decline, the lines that I put here do represent the SPX top for a local cycle, and you can see there was some correlation. I don't think it's causal, but markets were anticipating a drop, and then they got it. They were anticipating the drop, and they got it. But I will also note it's been a poor predictor in the past of where the tops were, especially here. Remember, these are weekly bars. These are not daily bars, so you could miss time by a considerable amount. Not a perfect way to do this, but nevertheless, I wanted to address the question on skew. Taking a look at the SPX structure here, just terrible in general. We're deep in the red. We closed here Friday. We're probably going to open this area today. Down here, 4,000 is the major line in the sand to the downside. You can see a lot of red lines to get through. Poorly defined structure in general, back and forth, back and forth, back and forth, all the way through. We're not advancing anytime soon. Taking a look at the expiration, relatively weak. This is Monday, this is Friday. On Wednesday, we will see Thursday appear, and we'll have 5 days now of 0 DTE showing up across the board. I will note here that we've jumped a major amount, again, in net gamma expiry. When we have such a deep expiry on the monthlies, that can be pretty volatile, so we'll have to watch this. In general, just be aware this is not very strong, although today is a little stronger than the rest of the intra week, and Friday looks to be a little stronger there. On the 0 DTE here, showing 0 DTE negative, not very strong here at circle 3. Circle 4 is the dominant positive gamma expiry up here at 4,200, not anticipating that we're going to push up in that area, although the entire range that we have shown here is in play. So you can see here that we could open high, low, close, move the entire range for today. We did park over the weekend right here at this transition zero. We see this all the time, so pay attention to these zeros. They do matter, and some of you are opportunistic in being able to play these things. To the downside, you can see where the structure is supportive of liquidity today. Just be aware of this, that these will become sticky points if we continue down 4,000, showing here at circle 6. Below that, it's going to be a little more challenging. There isn't a lot of detail down below 4,000, so we're going to have to watch that fairly carefully. In the combo, which is the AM and the PM settled, negative, very, very deeply red here. And you can see the transition zone right here at 4,200. It's red all the way on down on net gamma. I think that's pretty important. Also note here over at Circle 3, at least 25% of the SPX combo is expiring with the monthly. That's a fairly significant amount. It's at least 1.5. We'll probably push upwards of $2 trillion by the time that rolls around. So we'll want to pay attention to that. It's a lot of money to get redistributed, and where they redistribute it will be important. The other thing I want to draw your eye to are these areas in yellow that I highlighted. These are the delta, net delta dollars of adjustments as we go through each of these ranges. These are very large numbers, folks, and pay attention to these. It's going to be very, very difficult to get over some of these numbers or get through these numbers. Now, we're going to gap down into here, which I think the combination of the net gamma that we see here at 4,100 and circle 5 area, all the way on down here to where POI is at circle 4 and 4,000. I think this is going to trap us in this area until it doesn't, of course. But note the delta levels here at 4,000 are not as strong as you might think, even though the gamma levels are strong. Just be aware of that. So I think the overhead resistance is fairly deep and fairly strong. We're just going to have to wait and see where we go from here. So trajectories to look at on the bull side, although I don't recommend the bull side except for very, very short-term plays. We do have significant downside protection in place. Watch for the monetization, as I showed you earlier in the 0DTE, especially on the SPY, Qs, and IWM. People will want, because those are equity settled, people will want to capture their profits if we continue to move down. The zeros of the complex are stabilizing. And I think that too is indicative of people now thinking we're at the bottom of a particular cycle and are starting to go in a direction where they could take advantage of a move upward. So what do we want to do? We want to watch for the puts being closed and a reversal upward in prices, and you can watch this using flow sum and net flow in the AI channel. In the bearish potential side, cumulative tick still is terrible. Longer term downtrend, high negative gamma, extremely high negative gamma in the SPX, and we're going to gap down this morning. So I think that will set the mood, and we could move down very, very aggressively through 4,000 intraday, certainly within range. I think you play downside off key levels that are acting as resistance. Now, this list over here on the right-hand side is a little bit longer. I did take the time to update both the ES as well as the SPX. A lot of levels here, and part of it's because of the PM settled, the AM settled, and then the combo in addition to the ES. So pay attention to these. I think each of these layers, levels in here could be opportunities. So that's it for today. If you liked what you've seen here today, come join us at GammaEdge.us. That'll take you to a sign-up page. That'll get you into the Discord, 14-day free trial, all the tools turned on, and you'll get to interact with a lot of the traders there and see how you can apply this to your trading. Follow us on Twitter at GammaEdges with an S, and then YouTube. Of course, you're watching that here now. If you like today's content, hit that like button and subscribe so that you can get notified the next time we post something. Thanks, everyone. Make it a great week, and good luck to everyone.